So the Tebow effect is across Australia. It explains at a suburb level the difference in how we perceive things and the migrational patterns that we tend to follow. We follow good governance and we follow good community. And of course, that's very different across our cities. And when we think about our cities, quite often we think, well, something's 15 kilometers to the city, it must be good. But that doesn't mean it's got good governance. That doesn't mean the circular economy is working in that precinct. Welcome to the Urban Property Investor. I'm your host, Sam Saggers, here to help you crack the code of real estate wealth. Today, we're going to dig into Tebow's hypothesis around property markets. Yes, we all vote with our feet where we want to live, what makes one area more important and more valuable than another area. It's a worthy conversation. Let's dig into it. But hey, welcome back, regulars. You know the drill. Play the show in double speed. Get your life back. All the episodes I've done are actually lessons on real estate. But hey, here we are. I've got real estate depression. Yes, I was at an auction yesterday, dialing into the auction, watching it on my phone, trying to buy a building in Melbourne. And yes, I didn't come close. It was very, very sad. Nothing worse than doing your due diligence on a property and going to auction. And of course, someone else is prepared to pay more than you and has a more sizable budget. And yes, I got outbid by a sneaky older fella. Yes, a pesky baby boomer that hasn't spent their money their entire life, all of a sudden decided to buy the one building I wanted to own in real estate, 1 Alfred Street, Richmond. Yes, feel free to Google it. That sneaky little building could have been mine, but I failed. And I tell you what, when you, lose at auction, it's quite a weird feeling, isn't it? It's a bit depressing because you get your hopes up, I guess. You get a little emotionally attached to the real estate and, I guess it comes down to who's willing to push it on the day, and that wasn't me. So have to go back to the drawing board. And of course, the real estate agent sent me a consolation building. He said, this might be more for you, and sent me a fire hazard. Yes, a building that really does look like it could catch on fire. So, yes, I've got real estate depression, but let's try and soldier on. We never know if the show's going to be good till we get to the end, but let's do it. What makes one suburb worth more than others? And really, it's an interesting phenomenon at the moment because a lot of real estate at the moment is being purchased in the marketplace, and a lot of investors need to make decisions based on really their budgets in a very, very hostile market at times. Australia is not an inexpensive place to buy real estate. And of course, one could argue that a lot of real estate being purchased at the moment is in suburbs, which are pretty dysfunctional. Local government area is not functioning right. The local government area doesn't deal with crime very well. The local government doesn't look after the local community very well. There's a lot of graffiti. There's sort of broken park benches. There's just problems. And of course, as a property investor, we need to sometimes make a decision whether we're following community or we're following sort of the instruments of price and land. And of course, the question of local services, lifestyles, and the perception of a community, not just land size and distance to the CBD, is a critical one. Now, was a famous economist called Thibault who came up with the idea that we vote with our feet, and how people choose communities is very, very different. People will leapfrog communities, leapfrog distance to the city, leapfrog land size to find community. Community is probably one of the central ideas around growth in real estate. People who want to live somewhere aren't necessarily chasing capital growth. They're voting based on their preferences to services, to lifestyle, and to the public realm. And really, as a property investor, really what we're trying to do is study behavioral patterns of human beings. Where are they wanting to go and live? And if more people are going to live somewhere or fighting to get in somewhere, you get a growth effect. Now, I've referenced this before, but in real estate, there's kind of two effects you can study. One is the halo effect and one is the neighborhood effect. The neighborhood effect is really quite simple. People love the neighborhood and they don't want to leave. And of course, when people love the neighborhood and they don't want to leave, the neighborhood can become tightly held. It just means there's less property sold every week because less people are putting their property on the marketplace. And of course, the neighborhood effect, if it links to the halo effect, is also pretty cool, because the halo effect is the idea that people from outside a local government area, a suburb, want to come into that suburb. They want to be part of it. And when they assess where they want to live, the suburb is high on the agenda. And of course, this means people will upgrade into that suburb or get themselves onto the property ladder, wanting to live in that neighborhood. So Charles Thibault, he was basically an economist from the 1950. And he basically came up with a theory that everyone votes with their feet around where they want to live. And it really does make sense. And probably during COVID, we saw this theory come together exponentially. Residents moved to communities offering the best mix of services and amenities. And so lifestyle is an important factor. And how councils kind of compete to attract people is very, very interesting, because the efficiency of a local government will attract residents. It's really how it kind of works. Now, I live in the local government area of Manly, and I have to say, in Sydney, the local government area of Manly, the Northern Beaches, is unreal. Like, there is just the way the local government looks after the actual public realm is so good. Like, you've got it would be very hard to find graffiti. It would be very hard to find litter on the ground. It would be very hard to find a broken park bench, a pothole on the road. It is just kept immaculate. And the functionality around the public services is very, very good. There's even kind of free buses for old people to get them around. And overall, from a governance perspective, the local government area does a very, very, very good job. And so what happens is good local government drives demand and raises values. And effectively, those higher prices then creates a circular economy of better services. And of course, if your house goes from 2 million to 4 million, your rates are going to go up. But your rates will go up proportionate to a increase in value. But what it does is it kind of comes a self-fulfilling prophecy of funding better services. So most homes in this area are multi-million-dollar homes, and it's funding a better level of community, a better level of services. And so it's interesting how it works. Thibault explains efficient government attracts residents, which drives demand, which raises value, which creates better services. And so that's why you often see more affluent suburbs just keep on becoming more affluent. The cure to higher prices in wealthier suburbs is higher prices. And effectively, you seemingly have no ceiling. So the Thibault effect is across Australia. It explains at a suburb level the difference in how we perceive things and the migrational patterns that we tend to follow. We follow good governance and we follow good community. And of course, that's very different across our cities. And when we think about our cities, quite often we think, well, something's 15 kilometers to the city, it must be good. But that doesn't mean it's got good governance. That doesn't mean the circular economy is working in that precinct. In fact, you can go sometimes to outer suburbs or brand new hubs, and you've got a further distance from the city, but you've got very good community. You've got very good governance. You've got very good circular activity of money going back into the local community. And you see that in amenity premium, better schools, better parks, better safety. These are kind of non-financial premiums that drive property values upwards. And anyone who's ever heard me talk, I'm always on about where is the green space, where is the livability space, where are the access to the good schools, what are the non-financial premiums that will drive property values upwards. And so again, it's a different way of looking at real estate. And I would describe myself as a property investor that studies social patterns and invests accordingly. Whilst there are multiple ways to invest, I really love the pathways of understanding the social behaviors of human beings. And really, people will leave areas of decline searching for areas of basically forward movement. And when councils fail to deliver on safety, on harmony, on livability, people will move away from those areas, causing really a population kind of loss, if you like, and basically stagnated property values. Now, you could say that, for example, Dan Andrews left Victoria this way as a state. You know, he caused a bit of damage during his period there and created a flat period of decline where actually some residents moved away from Victoria, causing population loss and property value decline. And you know, the proof in Thibault's theory is evident in that diagnosis. Obviously, things are starting to shift in Victoria. It's starting to go back into a better place, but it's coming from Thibault's theory of basically ineffective governance detracting value from its residents. So, you know, if a local government area is not performing, it's going to lose people to areas which are performing. And, you know, we see that at a suburb to suburb level, whereby one suburb is just functioning very, very well. And the amount of people lining up at an open home to get into that suburb, whether for a rent or for purchase, is exponential. And then we'll have other suburbs where literally at an open home, no one's going to. And of course, a lot of it just comes down to community. Community is one of the biggest principles of capital growth. And so how local government kind of deals with policies that state government creates is also a way to comprehend growth. Now, rich people love being rich, and what you find in generally more affluent areas is this element of NIMBYism, whereby really from a policy and zoning perspective, you don't really get the oversupply of more affluent suburbs. And so what tends to happen is you'd get a production of stock quite often in areas of local government which are underperforming. And the areas of high community value generally don't get too much supply pressure put on them, though councils obviously all have to meet some supply creation. Quite often from a zoning perspective, delivery around demand, in areas that are thriving, you quite often see it done very, very tastefully indeed. So as we know, in COVID, we saw people vote with their feet, and Tebow's model basically scaled right up. And of course, people sought affordability and lifestyle where community comes together. And we've seen this in a couple of ways play out. We've seen, for example, the Byron Bay effect, where basically really wealthy people said, well, I can now absolutely live in one of the most pristine places on the planet and work as a nomad digitally, and I've got money, and I'm going to go and live in Byron Bay lifestyle. And then we've also seen people sort of migrate through COVID up to the Sunshine State, Queensland, and of course, you saw people vote with their feet. What were they looking for? Was it land size? Was it, a renovation? No, they were simply looking for community. If they got a good parcel of land or something they could renovate when they were up in Queensland, maybe that was a secondary kind of consideration. But no, the true source of growth was community. Where is the community? And really, when I'm studying some of the community drivers at the moment and areas which are rapidly rising in people voting with their feet, basically modern foot voting, if you like, you can't go past Geelong. It's just overtaken the Sunshine Coast as the number one area outside of capital city, which is where people are moving to. And when you speak to people from Geelong, it's actually emerging as a very white collar marketplace of people who now can work from home and commute the 70 kilometres every now and then to that of Melbourne. And it's now the fastest growing regional area in Australia, overtaking the Sunshine Coast. And why? It's nice. If you go to Geelong, you don't go, oh, this is horrible. You go, wow, this is beautiful water. You can go have fish and chips down, sit on some nice grass, overlook the beach and overlook the coastline. And it's like there's great little bars and there's good schools and all sorts of things. There's beaches. And so from a community identity perspective, it's basically people are voting with their feet. And that's where, right now they're headed to. They were previously, Sunshine Coast was the number one place. It's still very high, as is the Gold Coast, but now we are seeing a feeder city like Geelong becoming hot property. And we saw that when, people voted with their feet to go live on the central coast of Sydney, which they're still doing, and that of Newcastle. So from an investor angle, we've got to sort of think about what this is all about. Where aggregate demand goes, drives growth. And when smart investors anticipate where people are going and moving to, if you can do that before the perception kind of completely shifts, you can make tremendous amounts of money from real estate investment. And we saw that effectively in Southeast Queensland. You know, those people that bought at the bottom of the market in 2016, 17, 18, then, picked up an absolute bargain, but then the market and perception shifted that off the back of COVID, and all of a sudden Southeast Queensland became red hot. And so really, as a property investor, I mean, one of the great ways to invest is just to study these kind of social patterns and apply Thibault's theory in their strategy. Identify councils improving livability. There's some great livability maps where you can identify improving livability. And when you find the trend, and if you find affordability, it's just a matter of time for capital growth. The population inflow will increase just how many people get into the schools, how many people want to do business in the neighborhood. And of course, the circular economy of more money coming back into the council per capita basically then creates harmony in an area. There is no population loss, there is population gain, there is more money circulating, and you get this kind of community effect where there's no graffiti, there's no shopping trolleys tipped upside down in the middle of the street, there's no cars parked on the front lawn, because society is functioning. And we have a great country, but some of it, half of it, is dysfunctional. You go there, you go, whoa, doesn't look very nice. Looks scary. It looks broken. It's broken suburbia. And people assume distance to the city is the key to wealth creation. It's not necessarily the case. Whilst certainly suburbs, which are traditionally well looked after in local government areas close to the city, do very, very well. Certain suburbs close to the city, which are full of urban decay, full of socioeconomic problems, do not do well. And so they might get lifted in value as a market surges, but it's really the last choice of buyers per community values. And so the emotions of identifying and belonging influences economics. And really, this is voting with your foot. Thibault's theory that people will vote with their feet. They will go, the communities compete. That's the reality of it, just like anything. Now, when you think about suburbs, just think about them as different brands. You could use a car brand, you could use a clothing brand. You've got the eastern suburbs of Sydney. It's the Louis Vuitton of clothing for Sydney, for the property market. And again, like the better the brand is, the better things, the better sort of the circular economy of that neighborhood. And again, like some brands are emerging, some suburbs are emerging, and the best managed suburbs, they simply just win population and price growth. And that's why I'm still very much an advocate of finding even emerging suburbs. And if you study my 4X growth plan, which is, I always explain what it is. It's just a plan where if you buy well, choose a good location in a solid marketplace, and bring some emotional drivers to the real estate, you'll get 4 times growth on your real estate, you will 4x your growth return. You will get a higher rate of growth. In my 4x growth plan, you will note that I'm always looking for emerging marketplaces. And emerging marketplaces are improving brands. They are brands on the trajectory of growing. And so they might be a suburb, which is a new suburb, but because it's well looked after, because developers have invested in that suburb, the brand of that suburb is coming very, very, very popular. And today, like if you thought of, for example, a suburb called Newstead in Brisbane 15 years ago, it was a nothing brand. But from a local's perspective, it was an emerging neighborhood because it was right next to the most expensive suburb, Tenerife. All of a sudden, some beautiful buildings got created, some life and energy was put into the neighborhood, some great bars, some great shops, some great gyms, some all sorts of things were put into that neighborhood, developed in that neighborhood. And now, again, that community is just prospering so much. And you've just got this kind of circular economy, whereas you go one suburb over to Fortitude Valley and, it can be pretty crazy at times. So the interesting dynamic is, in the end, real estate is not just about the land, it's about belonging. And in Fortitude Valley, for example, in Brisbane, people don't feel like they belong because it's socially still broken. It's really it's the nightclub precinct of Queensland. So I can understand why people, don't necessarily can find harmony in that suburb. In the end, real estate is not just about land, it's about belonging. And, you can go to a place like Newstead and people are now, like, you can buy a Newstead beer, like Newstead Brewery exists. Like, people belong to the community of New Farm, Tenerife, Newstead. And the same thing is happening in places like Geelong, where the work from home concept is reframing that area is just not about the land, it's about belonging. And where people want to belong, you'll find people moving to. And your job as a property investor is just to get there first. All right, folks, thanks. We'll talk again soon as we workshop more real estate fundamentals. Hopefully that was helpful. Thanks for tuning in to the Urban Property Investor. If you enjoyed the episode, make sure to subscribe on your favorite podcast platform or YouTube so you never miss an episode. I'd love for you to rate the show and share it with your family and friends. Let's spread the word about property investing. Stay connected between episodes on Facebook, Instagram, and LinkedIn. And check out the rest of our podcast network at positivementor.com.au. And if you're serious about growing your property portfolio, don't miss our complimentary Property Investor Nights. Register now via the link in the show notes. See you next time.